Welcome, eCom Logistics Nation. Thank you for joining today's episode. We're on a mission to share e-commerce logistics insights, trends, successes, and challenges from the leaders and innovators in our space.
One of the things that we're seeing is because of the uncertainty, it's really important from our customer standpoint on how to build resiliency and redundancy in the supply chain. And that there's continually these large events that can prove disruptive, but we as companies, we as individuals need to continue to progress and move forward.
Welcome to the eCom Logistics Podcast. Excited to welcome Will O'Donnell, Managing Director of Prologis Venture, the innovation platform and venture capital arm of Prologis that launched in 2016. With over 24 years of experience in real estate and technology, Will heads this new group's effort to invest in cutting-edge technology for supply chain, logistics, and real estate. He's led over 40 investments in Series A through growth stage companies. Many companies we're all very familiar with, including Flexport, Locus, Lajoie, SVT Robotics, and Pandion, just to name a few. Will, super excited to have you join us and welcome to the podcast.
Thank you. Excited to be here.
So what we are saying here is if you are in the logistics startup space and you don't know Will, you're probably not in the logistics startup space.
Yeah, exactly. Well, we'd love to jump right into what took place over the last week and the situation, the unnerving situation for many that occurred at SVB. Really, over the course of a few days, clients of SVB dealt with a really scary reality. They didn't have access to their accounts. They didn't know if they were going to be able to make payroll. So there was just a ton of unknown, a ton of stress. And I had a couple conversations over that weekend too, with companies that had a large portion of their cash on hand in SVB. And I think there's a lot that's been reported, right? It was certainly top of the news cycle, but would just love your perspective on like what happened. And why was this so impactful to the startup community?
Interesting couple of days. I don't think I ever would have imagined I spent this much time trying to understand banks' balance sheets. I think SVB has been an incredible partner to the startup innovation ecosystem for 40 years now. And I think because of their expertise, their ability in understanding the environment that the startups work in and what their needs may be, they've been an incredible partner. Obviously, I think everyone's probably read a ton of articles on this and understands a bit on what happened. So I won't necessarily get into kind of what caused the issue. I think the outcome was that people had to figure out over the weekend how to deal with the situation. And as you mentioned, concerns about making payroll came to the forefront. The government obviously did step in and I think made a very decisive action to instill some certainty in the situation and provide portfolio companies, startups, the ecosystem with the wherewithal to ensure that employees were able to get their payroll and that SVB was there and able to continue to support companies. So I think it's the thing that's pretty amazing about it is how fast it happened. And if we look back in history, back to the great financial crisis, WAMU, which was the last big bank to go through a similar situation, in 10 days, they had 17 billion withdrawn. I've read that on Thursday, SVB had 42 billion of deposits. And it just speaks to like all of us bank online now, and you have technology that creates connectivity, which has a lot of benefits, but it also created this situation where in an incredibly short amount of time, that much deposits were withdrawn and really put pressure on a great bank. And that for me was one of the more amazing things is just some of the side effects of technology that no one really thinks about, but it does something going forward. Regulators and the banking side have to think about how to handle situations like this where people are making decisions in the absence of information that had a material impact on a bank.
Yeah, and just to that very particular point, I was reading an article this morning. Israeli-based venture fund, I think it's called, and it's a news article, so I can speak to it. Entree Capital, one of their managing partners, essentially sent a WhatsApp message on that Thursday to every single one of their portfolio company, and the message literally read, because there was a copy online that says, don't ask questions, just withdraw money now.
So with that, Ninad and Will, what was really interesting for me over this past weekend was the strategic planning. Like, everyone went into like, what are we going to do? How are we going to, get through? I had some founders, that, as they were sending out notes and updates, they were like, okay, we're not going to do any salary for founders or the executive team. We're going to make sure the rest of our people get paid. We're going to, like, what I saw happening was actually pretty, in a very bad situation, was actually pretty refreshing, because you saw people try to figure out. There was one company that we work with that, had just closed a Series A, and they had about an 18-month, burn rate in front of them. That actually got that got reduced to 6 weeks. So, I mean, just thinking about that amount of pressure, but then thinking through like all the strategic planning over like 72 hours, 72 hours, and everything that went in to say, okay, on Monday, here's what we're going to do, because we've got to figure it out. And to your point, Will, like we're saying SVB, and they have a great reputation. When you think about $42 billion of withdrawal, like how many banking companies could actually withstand that? So just all happened so fast. So from your perspective, like, how did I know you were in the trenches helping, and talking to companies, like what was going through their mind? Did you see any really interesting strategic planning come out of that? Again, how do you turn, a negative situation into a positive situation?
To the point you were just making, I mean, it was overall, like, if you're looking for silver linings, it was really nice to see people try to do the right thing. And in a situation like that, it's challenging because there was a lot of uncertainty. People did not know what was going to happen. But first and foremost, the concern that I was seeing from companies and people in the ecosystem was, how do we ensure that employees are made whole? How do we ensure that employees receive their paycheck?
Yeah.
There was obviously longer term implications that trying to people think through, but in situations like that, you have to focus on what you can control, what you know, and what's immediate. And very quickly, people were trying to figure out the most important thing was to make sure the employees were treated well and received their paychecks. How do we ensure that to happen? And as things became clearer, people could get a better picture of what was long term. So I think obviously it was a really difficult situation, but looking back, it was good to see people do the right thing and really try to figure out the right solution that was fair and equitable, but really solved the issue on the table of ensuring that people had the capital to make sure their employees were receiving their paychecks.
I'm glad to have a net positive outcome at the end of the week, so or at the beginning of the week. So I think everyone woke up pretty happy on Monday morning. Some of the stresses were gone. So
we'll see. It's an interesting time. So there's obviously, if you kind of look back the last couple of years, there's been a number of once in a lifetime opportunities to learn and grow. Whether it was a pandemic, boats getting stuck in the Suez Canal. I mean, this most recent week. So it's our world certainly is interesting, and I think to kind of turn it to supply chain. I mean, one of the things that we're seeing is because of the uncertainty, it's really important from our customer standpoint on how to build resiliency and redundancy in the supply chain. And that there's continually these large events that can prove disruptive, but we as companies, we as individuals need to continue to progress and move forward. So that's been one of the real changes that we've seen, is just from a supply chain perspective, it is now a C-suite focus because people realize how mission critical it is, and that there are events that happen that can impact how it flows.
That's you bring up a really good point, right? Like with all increased focus on supply chain diversification, creating resilience in the supply chain, right? That's where we see most of the promising investment, particularly. What actually excites you when it comes to like that resilient side? That is it like what side of the supply chain tech space that gets you excited right now?
When we're looking at the supply chain, it is an incredibly complex system, and you have a number of different companies that get involved. So if you just think from a product being manufactured somewhere, put in containers, shipped, going through ports, and then put on trucks and going to our distribution warehouses, and then going to someone's home or retail center. Like, the amount of different companies that are involved in that process is pretty astounding. And it is amazing that it flows as well as it does, but there's a lot of opportunities for improvement. And innovation occurs when you remove constraints and suddenly new white space or opportunities open up. And a lot of times it's changing a business model where, okay, this is just how we've done business for these years. An interesting story, I mean, McDonald's, one of their most successful days ever was when they went from breakfast. It used to be you couldn't get breakfast after 10:30, and then they did breakfast all day. And that literally was and that was just a change in a business model. Obviously, they had to figure out how to serve breakfast all day, but it was something that they could control. And I think that's also where technology comes in, where you just think of the advancements. Now we have a mobile phone, which is literally a computer that, think of all the things that you can do on the phone right now. I mean, I'm on an iPad talking to you guys over video, right? These are constraints that are removed, and it opens up opportunities. So when we look at supply chain, the invention of the container was one of the things that really revolutionized supply chain. So it was able to systematize how goods were stored and moved. And I think the last 5 years, we've seen even more rapid iteration where companies now are understanding, okay, how do I take an AI ML and apply it to automation within a warehouse to create more flexible modular robots? How do I use technology database to do better inventory planning and inventory management? Because if I, as a consumer, now have an expectation that I can do same day, next day, 2-day delivery, as a supply chain provider, I need to have the inventory in the right place at the right time. And that's actually a really hard problem to solve. Okay, it's weather patterns may be different in San Francisco today than they are in New York or Chicago. So how do you make sure you have the right patterns, right inventory in place? And that's where I get excited, because it's this intersection between bytes and software and technology with atoms, which is the physical movement of goods. And supply chain has been an industry that's been built on physical assets. So it's really, how do we take this technology and increase the efficiencies, get systems to start working better together, to get better visibility. And it's, I know, something that you guys have spent a ton of time really looking into, and that for me is what is exciting. It is a hard problem, but it's mission critical. At the end of the day, everything that we have at our houses and our homes came through supply chain to get there. The clothes we wear, the food we eat, the computers we use, the couches we sit on, right? And it is the underpinning of our economy, but it's something that's been overlooked because it kind of worked, and everyone just took it for granted until COVID. It actually exposed how important it actually was and how challenging it actually could be to run it. The other area that I'm really excited about is on net zero and climate. And that's something that you just look at the number of companies that have made net zero commitments, ours being one of them. For a retailer, 5% of their costs or their revenue costs are related to supply chain, but 90% of their carbon emissions. So if we're going back to the C-suite suddenly becoming interested, but COVID exposed that it's a mission critical part of the ecosystem is their supply chain. If you have made a net zero commitment, supply chain is a key area of focus. And for us as a company, it's something we're really passionate about. And looking at the solar business we've built, we're also starting to do battery storage. 2 years ago, we launched an EV charging infrastructure business. And these are good businesses, but they also serve a really vital part of creating a world a better place and trying to bring our customers and helping them achieve their goals of getting to net zero faster. So that's an area that I'm personally really passionate and excited about. And I think there's just going to be more and more opportunities in the next couple of years to focus on investments and building companies in that space.
Will, you left us a bunch of golden nuggets in that.
It was so much what you just said, right? There was, when you were talking about the technology pieces, I can tell you I actually had goosebumps, because It is the area for long ignored, and it's an interesting dichotomy, right? Where you have, we fall in the industrial space, kind of, but we work very much in the warehousing space, and a lot of technology is really old. But the exciting part is, even little technology application has huge returns at this point. So it's just literally open right now to go in and make so many improvements that you can just like step into a warehouse and be like, yep, here's a return on investment of less than 8 months, and you can go, make this change, and you're going to see returns for perpetuity, right? Like, so much technology that can be applied and options that are available out in the market. And truly exciting time as well, as the cost of things are starting to come down, like robotics as an example. The pace at which the technologies evolved in some of the robotics technology space, and how quickly you can actually recover any investment that you actually put into it. So I just have to say, on that front, completely agreed. And also on the net zero side, and we discussed this on the prep call, Will, there is also this side of like, it's no longer lip service that people talk about sustainability and net zero. It's actually people meaningfully doing it. And the interesting part is it's affordable to do it. Again, it ties back into the ROI. It starts making sense.
Yeah, and it's a fascinating space because there has been so much change and evolution in it. And as technology has improved and people have invested in it, you are seeing the costs come down and make it more and more competitive. And it's an area that's going to continue to evolve. And I think there's just a huge potential there. And there's a lot of true movement and passion from people behind it, which has just been great to see.
Yeah, completely agree. I want to go back, Will, to, unfortunately, you brought up that McDonald's example, because I am guilty of a sausage McGriddle at 3 p.m. So I love it and hate it at the same time. But that's a really good point when you think of like, it just takes this one change for this big impact. And a company that's in your portfolio, Lucas Robotics, and I did an implementation with them a couple years ago, and that's when they had come out with the RaaS, right? Robots as a service. So in previous life, you would have to take to your board of directors and your executive team the financial picture for making an investment in any type of automation or robotics, and you were typically looking at a 3, 4, 5 year payback. And when we did this one implementation with Locus, it was a 8-month payback. And the example was we were doing 35 units per hour picking in an e-commerce fulfillment environment. And literally in a 1 week period, that went to 125. So just massive improvement. The engineered payback, you're always concerned, like, is this actually what's going to happen? The payback was less. It ended up being about a 7-month period. But all that was enabled because this business concept of robots as a service, where very flexible solution, you could add, you could subtract, you could bring in you could scale up for peak season. And I think that's where we're seeing a lot of adoption. So these companies that are taking this perspective, we're seeing rapid adoption and growth from that perspective.
And I think they did think about it differently. And one of the areas that we spend a lot of time at company is really looking at adjacent areas to learn from. And like Locus looked at what was successful in software. And if you look back 10, 15 years, people bought software up front, and you had companies that started doing cloud, and Salesforce was one of the first on as a service model. And now most of the software you buy is a service. It hadn't been done on the hardware or automation side. And that's where Locus really understood that there was a need. And one of the big barriers to adoption of automation is the capital expenditures that are needed. And if you can eliminate that friction point, it helps to create the acceleration, and it opens up that solution for a whole bandwidth of customers that otherwise may not have been able to access automation. So it's something that we do spend a lot of time really looking at what other industries have done, what other technology is being used for, and then trying to think on how we can apply that at our own company or for our customers and create new solutions. As a company, one of the things we've really focused on the last couple of years is what we call essentials. And this is historically, real estate's been a business where you spend 3 months negotiating a contract, and then the landlord ignores the customer for the next 5 years and just like send me the rent check. But there's a real opportunity to understand where your customers' pain points are and how do I create a better experience for them when they move into a warehouse? How do I bring the right partners to the table so we can provide the racking, the forklifts, the IT equipment that you may need, the automation, we can do renewable energies. And it's really about thinking differently about that relationship that we have with our customer. And because our size and scale, we can think differently and we can behave differently than traditionally maybe a landlord has, and really become a true partner to them and how they build out the infrastructure they need to operate their business. And we are looking at things where how do we, I mean, real estate is a SaaS model, right? To some degree where you're rent. I mean, it's the epitome, you're leasing a building from us. So how do we think about the other capital expenditures that you may have in the building? And can we take that to a similar model that may create opportunities for our customers that they haven't had before and allow them to be more successful? So it's an area that we spend a lot of time in trying to truly understand where our customers' pain points are, defining where we as a company have a right to play, and then how do we build out businesses that can service that, or how do we invest and find the right partners to bring to the table? The adjacent learnings thing is something I think that's really important for companies to look at, because, and there's actually a great example. IDEO told me at one point that they were working with a hospital on the surgery process they went through. And so if you're in an operating room, how do you optimize that situation? And they kind of looked and said, okay, what are other areas that we could go to get learnings? And they defined what were some of the key components. It needed to be a mission critical, high-paced, high-pressure situation. Does it need to be indoors? No, it could be an outdoors. So they kind of went through all the factors and determined a pit crew was one of the best situations that they could study to apply the same learnings to a surgery. And you think about it, in a pit crew, like the mechanics all have 2 to 3 wrenches, because if they drop one, they can't go back and find another. So it's just simple things like that it was proven in another industry, you can bring it in. And I think in logistics, there's a lot of opportunity to do the same. Like, we don't have to go figure out how to create ML AI. Like, people have done it and applied it in other industries. So you think of like legal documentation where they're doing natural language processing, being able to extract, and like, how do we digitize what has been a very heavy document industry in the past? How do we start using computer vision to capture images of trucks coming in and out, or what occurs in the warehouse, what's going in through dock doors? How do we optimize movement? So it's really, what I get excited about is being able to study other industries, talk to other companies, understand how they're applying technology, and then bring that back and see if there's constraints that we can remove in our own industry that open up white space for opportunities to create more efficiencies, drive new revenue streams, and really create that interconnectivity between the different parties in the supply chain.
That is so interesting. And just listening to you from like the way you think and you know, the perspective, and maybe I use this opportunity to educate myself, because I run into this a lot where you know, I'm talking to a SaaS solution organization in the logistics space, and I'll say, okay, guys, but this client needs something very specific. Can you please do some professional services or add some, you know, high touch kind of capability to actually address the client need? And the response usually is, you know, if they are early stage or even a late stage startup, is like, oh, you know, we don't want professional services revenue because it negatively impacts our valuation, right? Like, it's all about ARR and MRR, right? So given that you sit in the space of valuations, is it true, or is it just a myth that, you know, professional services revenue has a negative impact on valuation, any SaaS or RaaS organization?
I think if you look at the valuation of a consulting company versus a technology company, they trade at different multiples. I think the reality is, in supply chain logistics, there is integration time that comes in, that there is going to be customization. And doing B2B SaaS software is a challenging proposition. So there has to be development. I think people will look at like the percentage of a revenue that's coming from the software side versus the professional services. But if you are doing work on integration, being able to recoup the cost and make sure it's profitable. And other times people will try to bake it into the subscription fees. So I think it's not a one size fit all, but people do look and just try to figure out, okay, how much is truly software versus how much is engineering time that you're charging out. And there's a preference to have more of the revenue tied to a software. But it is important that if you do have integration or you're doing development, to be able to recoup the costs. Now, the challenge you do want to get into, you want to avoid is building bespoke products for a party of one. And it's something that we as Prologis think a lot about,
right,
is if we're partnering with the company, what would be considered secret sauce that Prologis would want to do and really we should develop in-house versus what's something that's more broader and a company. Like if you have to create a bespoke software solution for every single one of your customers, that is a really hard business to scale. But if I have to go through and try to figure out how to integrate my software in with existing databases, that's a common practice. But as a company, you want to figure out how to create that and minimize the additional work that causes, and over time get much more efficient about those integrations, because it is a barrier. And you look at automation, the time that it takes to integrate different robotic systems into a WMS or a WCS or WES is tough. And that is one of the barriers to adoption. And we invested in a company called SVT Robotics, which you guys are familiar with. And and that's their whole
them. Just a call out.
That's their whole premise, is they can minimize that integration time, and they can do what may take a month. Historically, have taken a month or two. They can do in minutes if they've already built out that connector. And I think that technology like that is really powerful, because you're again minimizing the friction that's needed to make a decision to try a new type of automation. Or if I can set it up and test a couple robots in a matter of minutes, that's a big deal compared to, okay, I've got to go to IT and do a month-long integration to see if this works. And then if I want to scale up and get multiple different robotic systems working together, a technology like that becomes really powerful, because it eliminates a lot of that friction up front of trying to get systems to speak to each other.
Absolutely. And just going back to Locus on that front, right? Like companies like that we are in the early stage of this revolution, let's call it, right, where I adopted in one of our sites Locus's initial pilot implementation in 2016 timeframe, if I'm not mistaken, or maybe it could be 17. Yeah. And yes, the integrations didn't exist. And so there is all of this customization that we have to do. We ended up spending a couple $100,000 just to integrate into robot, for Locus to actually make it happen. Fast forward 7-8 years at this point, the same WMS system now has an out-of-box integration into Locus, right? So you are starting to see the standardization, right? Just the same way as like if you're implementing a traditional conveyor system, most WMS, WES, WCS know how to talk to them. The same way, but there is definitely proliferation right now in the industry of like, I have my API, this another robotics has their own API, et cetera, and that's where solutions like SVT are going to start consolidating, right? Like helping with bridging that gap and creating more standardization. So it's just a matter of time that we'll start seeing higher adoption and much quicker implementation.
Well, we feel super lucky to have you today. So I do want to kind of get into everything that's going on in the VC, funding environment as it relates, to our audience, on the logistics side of the fence. And I was looking at an interesting graph where, if you go back to like 2009 and you look at VC investment in supply chain, specifically here in the U.S., it's really low. And then you have like in 2012, you have Amazon does the $775 million acquisition of Kiva. And then like around 2014, that's when you start to see like the VC world really start investing in supply chain specifically. And I think that's where we're seeing a lot of obviously what we get to take advantage of today with everything we just talked about. And Something though happened, right? And again, we've got a lot going on in the world, right? We've got a war, we've got macroeconomic factors. There's a lot going on. But even like for some of our clients too, where, funding has slowed down, something is happening right now where it feels like towards like the end of 2022, somewhere like in Q3, Q4, people started tapping on the brakes a little bit as far as like, pushing out additional funding. And it seems like we're not seeing as much M&A activity, and we're not seeing as many, certainly later series funding. So, BCD. So would just love, with all your expertise in the field here, would love your perspective on, what's going on, what does the rest of 2023 look like? And from a supply chain perspective, like where do you see the market going?
There's a lot of factors which cause capital outflows to slow. I mean, you just look at a basic one on the interest rates have gone up. So cost of capital has increased for any business, whether you're a tech startup, whether you're a trucking company, you can kind of go through, but I mean, the cost of capital has increased. With the cost of capital increasing, the expectations that investors have on returns has also shifted. And I think we can look back in 2021, and I mean, everyone was investing in cryptos and NFTs, and valuations across the board, especially in high growth companies. You can look at the public stock markets and see what happened to some of the tech companies. So there was a shift in mentality from a low interest capital is relatively cheap to how people think differently during this environment where capital is more expensive. I think specifically for supply chain and logistics, it's an environment that at the same time, supply chain was proved to be mission critical, as we were discussing earlier, and that you have some geopolitical crises that are happening, whether it's the war in Europe, the relationship with China is evolving, and people also looking at just in time was great on paper. It really fell apart when the real world intervened. And now people are looking at, as we were discussing earlier, how to create a much more resilient, redundant supply chain so their businesses continue to operate. So I think you have an environment where capital is more expensive and companies are thinking about how to allocate it. At the same time, they're realizing supply chain is more and more mission critical to help them achieve their goals. So I think that is a confluence of those events that is continue to focus investing in this area. But it's always been an ROI driven business because you make money in supply chain by really being a good operator and understanding where your margins are. And you're just continually tweaking. And it's an industry based on continual improvement. And I think of any industry, like really good operators know to the penny what they're making. And so in this environment, it actually bodes well for people who are very thoughtful on how they allocate cash and how they think about ROI and where they're investing that. And the example you're giving earlier on robotics, like you can get true ROI from investing in a company or using a company like a Locus, and it creates an opportunity for companies to really continue to improve their business. So I think within supply chain and logistics, you have people who have been trained like how to really think thoughtfully about measuring progress, measuring ROI, measuring where capital goes to. And that is a skill set that would be really useful in the next couple of years because people are getting more focused. And I think some other industries may not have had that discipline that our industry does. So I think we're going to continue to be resilient and see opportunities. And you obviously can read in the papers and other things that some of the industries that are really struggling with kind of this changing environment.
Absolutely. I mean, yeah, logistics is real. NFTs and blockchains, I guess that's more on the ethereal side of things. Yeah.
Maybe too, just, and obviously, Ninad and I have spent a lot of time in the 3PL space. And, what's been really interesting for me, someone who's been picking and packing orders since 2003 and started my career in the basement of a bridal shop. So, learned the business the hard way.
Yeah.
We saw a lot of unicorns pop up, in 2021, 2022. And again, going back to what you guys were talking about, like these 3PLs, many of which, provide a really good service to a segment of the market, were categorized as tech companies that do supply chain. And again, we saw a lot of money being raised. We saw, unicorn status, multiple times. And, from your lens, how do you kind of see that 3PL logistics kind of valuation? Like, obviously now we're, it's not just about top line, like you were saying. Everyone's kind of looking for the ROI. They're looking for the profitability. How do you embrace technology and automation to start returning on those investment dollars that were being spent? So do you see there being like maybe a little bit of a slowdown there in that segment specifically? Or how do you kind of view that whole segment of the market?
By that, like 3PLs serve such a critical purpose in supply chain. And the way to think about it is a retailer may be an expert in creating new product and marketing and branding. Is that retailer an expert in operating a warehouse and procuring freight? Maybe not. I mean, there are some that are best in class at doing it, but that's why you hire a 3PL. And as the world got more complex, and it used to be, okay, I just need the replenishment of a retail store. Now I need real-time replenishment of retail store based on the SKUs they need. Plus, I have a whole e-commerce D2C type business I need to run. And you guys are the experts in the complexity of doing that. And I think because of that, it does make sense to hire companies that specialize in that. And a big portion of our customer base that we work very closely with is the 3PL community. I think the evolution is occurring where they are investing heavily in technology because of the efficiencies they can get, while at the same time working with their customers to figure out contractually how do they structure it in a way that works for them and allows them to make these investments. And that's one of the things that I get excited about, is just that business is evolving. And as they adopt technology more and more, it improves their efficiencies, makes them stronger companies. But we get to hear your guys' perspective out, because that's what you guys spend a lot of time doing, is helping retailers or 3PLs figure out how to build out these fulfillment capabilities. So I'll turn the question back to you guys. I mean, how have you seen it? Like, what's successful for them on how they can adopt new technology by same way being able to optimize or amortize it into contracts to really allow them to evolve and stay relevant and competitive?
Maybe a first time, Nanad, that we've actually had the question flipped. So, Will,
it's like going taking sand on the beach. Like,
I'm glad you did that.
You guys are the experts on.
I mean, there are so many different areas of the 3PL space, right? Like, so one of the things, like where, Dan mentioned, like tech-enabled fulfillment services. I don't think that a top-line 10x valuation made any sense back in, at the time that it was happening, and definitely not at this point. Because ground level, you are still a 3PL, and your op margins look pretty much similar to any other 3PL that's going to be out there, right? Like, so there's only so much juice to squeeze out of that as a, tech-enabled solution. So there is its valuation game that, maybe we don't get into too much detail. But as far as what you are saying, I think there is a massive opportunity where passing the savings on to the customers, but a requirement for capital investment, right? Like in an existing facility or a brand new facility, if you're looking at, listen, if I do my engineering study and it tells me that I should bring in AutoStore because my, customer profile fits as such, and I need to make a $8 million investment, I just don't have that, right? But if you can, that exact example that you gave that said, hey, we as a real estate company are technically in the business of, recurring revenue. We are a SaaS company, right? When you take that lens to that problem, I think there is always the pain share, gain share, because the traditional 3PL space, right? Like the large dedicated facilities that have $100 million of investment, that investment isn't coming from the 3PL. It's actually the client making the investment, right? But when it comes to the mid-market and the lower market, the clients don't have the capability to make the investment. While we know the efficiency is there on the table to be had, as long as, to one of the earlier points you made, the operator, the 3PL operator, knows their numbers, knows it down to the science of like how much am I going to gain and stick to my customer profile and make the right investment. And if I can get the right investment, now the gain share could be with the customer or could be, shared with the investors themselves. So that's where the opportunity definitely resides, without a question.
That makes sense.
Yeah, I think the only thing I would add is I think this conversation has all of the nuggets sprinkled within it, right? It's for, like you were saying, Will, too, like lean into what you're good at and leverage other providers that could help you that's not your core strength, right? I mean, when you look at WMS providers, right, they invest heavily in R&D and infrastructure and tech development. So like, is that somebody's secret sauce? Probably not, right, in the 3PL space, because there's really good providers that are out there. And something you had mentioned earlier, Will, that couldn't be more true in this space, is stay away from the snowflakes. Don't try to be all things to all client segments and profiles. Know your ICP, build to that, serve them exceptionally well, and you will absolutely succeed. It's when you start seeing people kind of chasing the the bright light and the really attractive logo, but it doesn't fit their profile, that things just really start to fall apart.
I think one of the really key things is having a deep understanding of the pain points and then what are the causes behind it. And once you have that, you can then find the right technology to be able to pull in to solve that. And that's something that I think I've gotten more and more excited about the last couple of years, is that you're seeing people who have deep industry knowledge, but also think creatively and can apply technology in new ways. And you look at part of the challenge that exists anytime a new technology comes out is everyone runs around and says that, okay, blockchain is going to revolutionize the world. And there are a lot of great use cases for blockchain, but there are a lot of things people tried to get it to do that didn't really address the true pain point. And we can kind of go through the litany of, you have the Gartner curve of like new technology comes out, it removes constraints. But I think being disciplined and really understanding, here's a pain point, here's the root cause, it allows you to then go look at a block technology like blockchain and say, okay, here's how we can apply it that actually solves a real business issue. Here's how we can take AI, ML, and apply it to a real business issue. And supply chain has lots of little nuggets that are real business issues that we can apply technology to help solve.
Well, don't open the can of worms around blockchain with me. Maybe that's over a bunch of drinks at some time, because the amount of projects that you see out there that are like blockchain and supply chain, it's like we are trying to shove a technology into a place just because, right? Like let's not try and there is some legitimate use cases, but most of the use cases I've seen out in the market are just like, let's shove this into where it does not belong. Just because it's immutable. I still don't understand what that means, but
Awesome. Well, Will, this has been the time flew by. I feel like we might hit you up for another chat here in the future. So I want to really thank you for joining us today. And obviously, you mentioned Prologis Essentials. We've got Prologis Ventures, and obviously Prologis as a real estate organization. So a lot of different opportunities for our audience to, different paths that they could reach out to Prologis on many fronts. So what's the best way for someone to learn about the, all the different things that you're doing? Is it LinkedIn, social, our websites, anything you could share?
We have a fantastic website that has a lot of information. We're actually pretty active on LinkedIn and social. The comms team has done a remarkable job of really disseminating our message through those channels. The ventures team is also very active and out there, and our essentials team and our leasing people, our customer people on the real estate side. We are a very customer-centric company. So for us, getting our message out and partnering with people is really important. Our research team publishes just great white papers that are on our website that really gives a unique perspective on what we're seeing from the industry. And one of the things I love about Prologis is just our size and scale allows us really to get insights across our global platform that are really valuable and unique. And I think how we partner other companies to share that, but also learn for our customers. So how we can get better and even learn more is kind of core to our ethos, but it's something that's I've been really passionate about here. And it's why I think this is a really exciting place to be.
Amazing. Thank you. Thank you. Thank you for joining us and really appreciate the time.
Yeah, my pleasure. Thank you, guys. This is great today. No, this was great.
Be sure to subscribe to the podcast to maximize your supply chain. Available on all major podcasting channels. Thank you for listening and see you in the next episode.